Welcome to this episode number 55 of Your Next Trade Code. Today, the most important results of all time. So, this week on Wednesday after the close, NVDA will come with the earnings. If you look at what's been happening over the last 12 months or so, this market is very much driven by very few names, and on top of the leaderboard, you have NVIDIA. So NVIDIA made since the end of 2022, 14% of the move of the S&P 500 on the way up. So roughly 171 points out of the S&P 500 were coming only from NVIDIA out of 1,246 points. So 14%. So most important results of all time. Very often the market gets excited. It's going to be the most important NFPs of all time, the most important CPI of all time. Pretty much the market has been driven by those names, and those are the drivers these days. As we're going to see for this week, actually there has been some changes and some potentially new drivers. So let's start with the year-to-date asset performances, looking at the stocks in the US. So roughly 5% for the S&P and the Nasdaq. Japan still very, very strong, making new highs, 15%. And interestingly, Europe as well is doing pretty good. So 5%. So I strongly advise you to look at the correlation of US, Europe, and Japan over the last 12, 18 months. If you do FX adjusted, and you will realize that they are more or less all moving the same way, which could be explained by different factors: passive investment, money trying to find places to find returns. But overall, not that many differences. So if you say, Europe is really rubbish, or Japan is much better, look at all of these performances FX adjusted. Year to date, so the dollar, strong dollar for the year. We're gonna have now the cryptocurrencies with Bitcoin and Ethereum up 20%. And at the end of the spectrum, we do have like natural gas, especially in the US, down 36%. So I don't trade natural gas. What I can tell you is many traders, especially retail traders, have been always trying to find the top or the bottom at natural gas. And from experience, I've seen actually many retail traders losing all their capital just because they wanted to be contrarian and saying, natural gas is trading at X dollars. I think it's a nonsense. And they double down and then they get wiped out. So be extremely careful with natural gas. This is really an asset that could be quite violent. So what about the week-to-date asset performance? And here we start to see some divergence. So actually now the Nasdaq has been down on the week by 1.3%. Not that much, but we start to see divergence with the winners. So the winners have not been that strong for the week. Japan, very, very strong, 4%. But this one is really the outlier, 10% for the cryptos. So we have seen more inflow. So if you look at the ETFs, actually, it's covered by some people on Twitter and especially someone on Bloomberg, and you will see that there have been tons of inflows going into those cryptos ETF. The reason is pretty obvious, because people want to have exposure to that space, and ETF is offering a better place than usual. What about anything that is cyclical with WTI and copper? 3% and 4%, so not that bad. What I should have mentioned as well is for the week, obviously China was closed because of the new year, and they will be back on stream pretty soon. What about the year-to-date industry performance? We looked at it in the past. So that's the S&P up 5%. You don't have that many winners. Okay, so that's the positive. You have many industries, sectors that are underperforming. But interestingly, looking at the week-to-date industry performance here, you're going to have the S&P that is here. Okay, so what you have, not that many sectors that are underperforming the S&P, but you have many ones that are outperforming. And you should go down and drill down. As always, one of the reasons we do that is to understand the price action, what the market, bidding or selling. And as you can see here, the names that have been weak for the last 5 sessions, we are talking cloud, we are talking digital infrastructure, technology, cybersecurity, Nasdaq 100. What are they? They are the winners, the one that keep on winning and not performing. So at least for this week, that we had over the last 5 days, the winners have been turning. So we start to see some rotation. We started to see some rotation that some of it is explained by the macro that we're going to be covering later. So week to date, I'm interested into here. You see IT is the big underperformer, minus 2.5% for the week, when it used to be really outperforming and outperforming. So very interesting one, the tab and about the rates, because stocks is important, but obviously you need to be looking at all asset classes and rates. This is the biggest asset class of them all, and as you can see, you have a massive move on the US 10-year. So we are up 35 bips, so 0.35% on the week. Similar in Germany, a bit more in the UK. What does it tell you? That tells you that the macro has been telling a different picture. So there has been a bit of higher inflation, and that's an understatement. So we had higher inflation coming from the US, both for the CPI that was on Tuesday, and we had as well the PPI on Friday. So higher inflation than expected. The trend was pretty much inflation coming down from very high level, and now it's back to the 3% for the CPI. So there are question mark, and that means probably going into the next slide, we do know that now the Fed is not going to be cutting rates as what we were expecting, or at least the market was expecting in December. So in December 2023, if you remember, market was expecting 6 cuts for the year, so almost 1.5%, or even more, it was 1.65% at one stage. Now, if you compare this 533 with December, which is at 453, that gives you 80 bips, 0.8%, and guess what? That is very close to 0.75, and this is the 3 dots that the market, or at least the Fed, was saying that they will be cutting 3 times for this year. So now the market is in line with what the Fed is telling us. When is the next cut going to be happening? So March, forget about it. Okay, March is at the same level that we have here, March, April, so that's the same. So first cut should be at least what the market is pricing now, around June. So everything has been postponed by 2 to 3 months, and actually the level, if you look the blue line here versus the red line, everything has been moving up. So when it moves up, that means the Fed is seen as more hawkish, that they're going to be not cutting as much as we used to think, and when everything is coming down, that is more dovish. So we start to see actually even some talks that the Fed could be, the next move could be hiking some rates. So really a big change in terms of rates, and this is one of the reasons, technology and the big performance have been pretty weak for the last 5 sessions. What about VIX volatility? So 14% on the VIX, as we're going to be discussing later. There has been some big moves on the week. Why? Because we got the VIX future expiry on Wednesday, and there is a lot of positioning through call spreads, especially the 15 and 25, so the range between 15 and 25. So we had a bit of big move on the volatility for the week. So now let's jump into the technical analysis, and I want to show you, obviously, for those who have been trading over the last few days and weeks, the market on steroids, which is SMCI, so super micro computer. So we had a big move over the last 5-6 weeks. So we were trading at 300, we broke this level at 360, and then we went from 360 to 1070, I think, on as of yesterday. And then, as you can see here, there is a big candle weekly. If you do the same on the daily, so let's move into the daily, you see this huge candle. So when one of the big mover, one of the biggest leaders is starting to turn, you need to be aware, you need to be listening to this change in the underlying. So again, we're gonna have NVDA on Wednesday, so that means some stuff are changing. What about going now into the S&P futures through the weekly chart? As you can see, this is something that I've been underlining for the last few weeks, is we are at the top of this range over the last 16 weeks or so, we had, only 2 candles down, and this one is negative for the week. And again, the market seems a bit toppish. That's the same with the Nasdaq. Even if we made new highs, it's not as strong as the week before. A bit of a turn for the Russell because, as we said, with the rates going up by 35 bips, we saw some rotation, and we saw some rotation going out of tech into the more small and mid cap, which will have been the Russell 2000. What about the Meta, Facebook versus the S&P? We made new highs, but still, a bit struggling. Still, it's looking okay, but there are signs of rotation. Not going to talk too much about CL1, HD1. It's not really moving. Gold, same trading range that we have been trying to find. Same here, euro dollar. So other assets, are not really moving that much. Really, the big ones have been for the week the rates, so US 10 years, the 2 years, the Fed funds futures, anything that is rates related, because we have seen CPI and PPI higher, and some rotations going into stocks. So going into what happened for the week, as we outlined a week ago, so we had the CPI on Tuesday. So here, this is your CPI. You had the higher print from the CPI. Expectations were actually a bit too low, and rents and wages are still on the way up. So CPI printing higher. And in the meantime, and I want to really outline this one, which is the VIX expiry. So VIX futures expired on last Wednesday at the open. Here, this is Tuesday that you have here. We saw a massive spike, and 30 minutes to 1 hour before the close on Tuesday, we saw some sell-off, because as very often, despite the positioning on call spread, many calls, what happens is you have a dampening of volatility. But really huge move. We went from 15 to 18% and back to 16%. So big move for the S&P. So we had the collapse. It's not a big collapse. Let's put everything into perspective. We are talking 1.5%. And then we recovered going into OPEX, which was here. So you have the OPEX for the future. We have the PPI, so a bit of a move lower. Then we sell a bit volatility. And then for the long weekend that we have in the US, because the market is closed on Monday, a bit of back to 50-20. So overall, on the week, some volatility on Tuesday. Then we dampened volatility again. So VIX expiry, option expiry, but there are some question marks. There is rotation. There are some leaders that have been topping a bit, and we have the biggest of them all, which is coming with the earnings, which is NVDA on Wednesday after the close. So finally, I want to outline this one, which is looking at the blue line here. This is the S&P futures versus the 10 years futures, and you can see that recently we saw divergence between the two. So the S&P did pretty well despite the US 10 years moving from 380%, 390% to 430%. So above the 4.2% range that we had more recently. So there has been the divergence. This is really something that we should be keeping an eye, because this divergence started at the start of this month, so over the last couple of weeks. If you think that stocks should be now following the move in bonds, that tells you for the S&P, you're probably talking 4,700 something. So you could be talking about 5-6% correction at least on the S&P. So now looking at the catalyst, as always, I'm interested into 2 or 3 catalysts. The biggest one is obviously this one, is NVIDIA on Wednesday after the close. Everyone is looking at it. So if we look recently at NVIDIA, how the stock has been moving, as you can see. So here, this is the close. Last 2, not moving that much. Before, very positive. Expectations are very high on NVIDIA, on artificial intelligence, that the business is doing very well. So we can overshoot. What is the implied volatility? Around 11.6%, so roughly 12%, whereas as you can see, more recently the move has not been that big. So in other words, implied volatility is higher than most recent realized volatility. People have been hedging themselves, but really To be honest, as I said, the market loves to have those funny headlines, and this is the most important. But really, this is an important earning, maybe not the most important earnings of all time, but that tells you about the color of those earnings coming. Second one, we get the flash PMI on Thursday. Why is it important? Because we started to see on the world PMI manufacturing, both in the US and in Europe, especially in Europe, some bottoming in the PMI manufacturing. So the world PMI manufacturing, which is done by JP Morgan, is at 50%. So neutral, no growth, no recession, but coming from low level, expectations are now, can we have a bottom in manufacturing after destocking, and could it get better going forward? So overall, flash PMIs, NVDA, another one that is important, FOMC meeting minutes on Wednesday. In between, we have a closed market, as I said, on Monday, because this is the President's Day in the US. You have a lot of Fed speakers. What is the move expected for the week on the S&P? 1.2%. So like kind of average level that we had recently between 1.1 and 1.3%. So those are the catalysts for the week: NVDA, flash PMI, FOMC meeting minutes, and this is more or less what we have. Again, the big move for the week has been in the bond market. So rates have been moving like a lot. Okay, we are talking 35 bps for the 10 years. Expectations from the Fed to be cutting rates, moving down from March, April, more recently into June, and cuts of 0.8% instead of 1.6%. So we are pricing now a Fed that is much more hawkish than it was 2 months ago, and despite that, the market has been up, 5-10% in between. So market leaders, is it the start of a turn? We have seen some rotation. It's always very hard to deal with rotation because it could be pretty aggressive. So this is it for me for the week. If you get some questions, if you want to join the trading community on Discord, please feel free to do so, and maybe you can find a good match for your trading. So have a good trading week, and I see you next week. All the best. Bye-bye.